let's get into it. Josh, we all got a lot of questions for you. So, all right. My first question is another one of your fans. Shout out to our guy Jamal. He likes you a lot. And Jamal always anytime the market goes down, because I'm heavy in tech, he always tell me like the rotation is happening. It's rotating. It's rotating. Like the money's rotating. It's rotating out of tech, financials, da-da-da. So shout out to our other friend Bam. He made a lot of money in XLF on that option play. So the financials, are we seeing a rotate? First of all, how do you feel about financials? And are we seeing a rotation into financials in 2021? How do you feel about that and XLF, things of that nature?
So this is maybe I'm long some financials. Like I own JP Morgan Chase shares. I've owned it forever. I'm never selling. That's my mentality as an investor, by the way, which we could talk more about. So a lot of that rotation stuff gets lost on me because I'm not going to try to jump from one to the other. I'm diversified. I try to own it all. And so I'm in some financials. The problem with the financial sector is that the largest companies all are dinosaurs. And, a lot of people, they don't even think twice, like, oh, where does the S&P come from? How do companies get categorized into these sectors, right? Like they think it's like a naturally occurring phenomenon. It's not. It's a committee. Ian will tell you that there's a Standard & Poor's is a business, a company. They have an index committee, and they say, you're a financial, you're a consumer staple, you're a utility. And it used to be easy. It was obvious. What's a bank? It has a marble lobby and pens on chains. It's a bank. They did something really stupid, not on purpose. They screwed up. When all these next generation financial companies, fintech companies came along, the stuff that you guys talk about every day, they categorized them as tech stocks. Do you know that PayPal, which arguably is the most important financial company in the world right now, is considered by the Standard & Poor's Index Committee to be a technology company, the software company? If that were in the XLF would be 5 times higher. Yeah. They don't even have Square in there. Square is literally merchant financial services. Like you couldn't get more financial services than Square. It's in the tech bucket. It's not in the financial services bucket. They did this over and over and over again. And what they ended up with was a sector that nobody would want to own. It's dominated by massive banks that are getting their asses disrupted and massive insurance companies. And that's why I don't think it's made a new high since 07. I think it's still below the 07 price, which is unbelievable. Imagine holding a sector and being break even after 14 years.
Yeah, it's tough.
But, all right. So what do I think of financials? I think we have to look outside of the sector if we want to make money in this space. So I also own MasterCard. By the way, MasterCard, you would ask somebody, is that a financial stock? Yes. No. Software. It's in tech. It makes no sense because American Express is in financials. So why would you have American Express in the financial index, Visa and MasterCard in the tech index?
Yeah, because they're
stupid, right?
They're in XLK.
Yeah. Stupid. But that's so you gotta I'll button this up. I'm sorry for the rant. So you gotta gotta think for yourself. You can't rely on the index. By the way, Walmart and Target, one's a consumer staple, one's a consumer discretionary. You tell me why. I don't know why. Right? There's tons of random shit like that. So you gotta think for yourself and don't just think sector, think company.
I got a question about another sector. And obviously everybody's high on Tesla, big on Tesla. We saw what NIO just did, and shout out to NIO and anybody that was in that early. But as we see more EV companies and rise, I wonder what that does to the energy sector, specifically oils and companies like Exxon and Chevron going forward.
Yeah, Tesla is now bigger than the entire energy sector put together. You know that? Yep. Sick. That's sick because as recently as 2013, Exxon was one of the top 5 companies in the world by market cap. And for brief periods of that year, it was number 1. That's crazy. It's 7 years later. And Tesla, which had only been public for 3 years in 2013, is now the 4th largest market cap in the S&P. CEO, one of the richest person on earth, or first and second, tied with Bezos. So it's not just the magnitude of the change; it's the speed, the speed at which things are changing. It's unbelievable. And so then the question is like, did we see the highest demand we'll ever see for barrels of oil? I think there's an argument that we have. So that's going to be a sector that shrinks. Now, if you're an equity investor, you own the stocks of those companies, that's not necessarily a death sentence. But I do think that you want to prioritize balance sheet versus any other consideration if you're buying oil companies, because you know the game now is going to be consolidation. In any industry that's shrinking, the next phase is not, there's no more growth companies. So now we already know the pie. This is the pie. It's never going to be this ever again, right? Oil consumption. Yeah. It's never going to be this. So it can only be this, and then this, and then this, and then this. So which company can gobble up the biggest slice of that pie? So that's the first thing. The second thing, Exxon may be getting religion now, but they were mad slow to this idea of like, if we want to be an energy company for the next 30 years, it can't be on oil. BP and Royal Dutch Shell told their shareholders, prepare for huge capital expenditures because we're going to go wind. We're going to go geothermal. We're going to make big investments in stuff that is not going to be profitable for a long time because we want to be around. And Exxon, under what's his name, the guy that went to work for Trump, Rex, Exxon was like, nah, we're going to stick to dinosaur bones. We're going to stick to, and now they got to reverse course. That was a bad decision. So some of the gigantic oil companies today will be gigantic green energy companies in the future. That transformation, though, could be very painful for their shareholders today. And remember, a lot of their shareholders are there for dividends. Those dividends are not promised. That's not like an interest rate on a bond where you could take it to the bank. Dividends, when we saw hundreds of companies cut their dividends this year for good reason. So I would just be careful with that space. You can make money. You can certainly trade oil and gas stocks, but from a long-term investing perspective, you want to pick the companies that seem to be committed to the next episode, which is not going to be, crushed up dinosaurs.
You got so.
I think did Ian get the next question?
No, again, I know Ian got a bunch. Go ahead, Ian.
But
I got a few.
Go ahead. It's interesting that you say that because they call it fossil fuel. That's why they call it fossil fuel, right? Because of the dinosaurs, and that's just really bizarre because it doesn't come from dinosaurs.
I think I learned that on the Flintstones.
So it doesn't come from dinosaurs. It comes from organic matter like plants and vegetation and dead dinosaurs and just it's I'm an amateur geologist. Bear with me. No, but you just look. We're not going to do a whole Trump thing tonight, but a lot of the frustration in this country is coming from places that historically people earned good livings pulling oil out of the ground, pulling coal out of the ground, and their daddy did it, their pappy and their grandpappy, the whole thing, and that has been taken from them. But that wasn't taken from them by Joe Biden or Hillary Clinton or Barack Obama. That was taken from them by economics, because fracking, the technology of fracking, made it so that these things are just not viable the way they used to be to power plants. Because we discovered through fracking that we are the Saudi Arabia of natural gas. Between United States and Canada, we have a 200-year supply of natural gas. So of course coal is dead. Oh, it's not political. It's economics. Yeah. It's not viable anymore. Forget about what it does to the environment. So natural gas is the bridge fuel. And then you look at some of these companies like Albemarle mining lithium, and you cannot make hybrid or electric vehicles without lithium-ion batteries. Maybe someday you can. You can't right now. So ALB is a stock that I think it's 180. This is a stock that it's in the chemical sector. It's an industrial. But this is very much a company that's part of the future because they've got the whole lithium game on smash. There's like 5 companies, and other than ALB, the rest of them are all from Chile. So people would rather buy the American one. So like that's if I'm an energy investor, that's where I'm looking. I'm not looking at whale oil, you know, like the shit that powered the 21st century. I'm just,
That's fine.
I don't have
You
a
have to move to the
mindset of
future.
let me buy what used to work. My mindset is always like, if I'm going to be an investor and be in something for decades, yes, I might get disrupted, but I don't want to get disrupted on purpose.
Yeah.
Like I want to at least give myself a chance to own something that's going to be sustainable.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.